Hey guys, it's Will. Hopefully you're having a great day today. And it's Saturday afternoon. We're jumping into the stocks. We saw some really big moves this week, especially in quantum. Quantum had double-digit figures almost every day towards the end of the week. We saw data center stocks do quite well towards the end of this week. And we got to catch some moves this week on semiconductors as well as the other stock that we were able to catch some moves on was what was it? We did Redwire this week. That was a profitable trade, and then we also traded AMD. AMDL was a great trade for us this week as well. That one did quite well after a big dip at market open. So we're going to jump into it. If you guys have any ticker symbols, feel free to drop them below. We are going to be focusing first on the top 5 data center companies. Now, data centers are powering the AI market and are responsible for all of the energy that's making up our current like ChatGPT boom of Claude and even our own software company we run right now is basically reliant on data centers. And you could hear Sam Altman with billions of dollars, hundreds of billions going into data centers. Mark Zuckerberg, you can hear him saying billions of dollars going into data centers as well. Are they spending responsibly? That is the question. I think the way of integrity to build data centers are going to be minimizing the impact on the local communities. And by building the data centers in those communities, wherever they're building them, they actually have a positive impact on the local communities, and that they aren't something that is just 5 years. Something that's actually 5 years from now will be really good for them in the future of data centers. So we're going to jump into those stocks today. And hopefully you guys are having a good Saturday. One thing to note as well, we did a reveal of the machine earlier this week. If you didn't see that breakdown, we had some really cool announcements. For example, right now, if we search up our first data center stock, which will be APLD, you'll see some things that we recently added here inside of Mercatus, which does AI analysis for you. It looks at the charts, the financials. It looks at the institutional holdings. It looks at the long-term research, the short-term research, how the news is looking, and the press releases, all for you. And we recently just added some new models here. So we added Claude, okay, from Anthropic, and we added Gemini as well. And now I can pull up OpenAI, Grok, Claude, or Gemini of the best models available from those companies to go ahead and do that analysis for me for future projections into the next day, the next week, the next month, the next 3 months, or what have you. So just want to let you guys know that is available to you now, and you can get those full breakdowns of these stocks. Now, something to notice here is we have a quick analysis from Gemini, for example. They considered some of the data that we gave them, and it looks like there is a strong projection for APLD to continue up above $22 a share, up to almost as high as $23 a share over the next 6 months. And in some cases, we're going to see some market pullbacks. We're going to see some ups and downs, of course, between now and the next 6 months. But for the most part, that seems like a pretty solid projection. So let's get into the first data center stock. And for those of you guys that don't want to hang around the whole video, you don't want to see every single data center company analysis, I totally get it. All we're going to do is reorganize them for you. Okay, so the first one is going to be APLD. All right, the second one is going to be AMD. Okay, the third one is going to be TSSI. The fourth one is going to be WULF. And then the fifth one is going to be ANET. So now you got it. You got the top 5. You can see our watch list. Not going to make you stick around. You have to, or anything like that. But we're going to jump into it. So here on this Saturday afternoon, we got some great investors here tuned in. We got Jer James here for the live session. What's going on, Jer James? We got Jose is here. What's going on, Jose? Jose'd like to get an analysis of QBTS. Yes, absolutely. Congratulations to all the quantum investors that were able to take advantage of the recent surge in quantum. Congratulations. Go have a champagne bottle because we see things surge about 100% this week. Zev, hi from Israel. Is VRT and ANET still a buy, or have they ran too much? That's a good question. When it comes to ANET, has it ran? Yeah, it has ran up to highs here. It's actually in our top 5. They have had really consistent uptrends though. And as you can see with ANET, there's a support and resistance there. And the next target here for ANET would be to make its way up into this range of about 7 or 8% continuation up into that $160 range in their trend. So are they running too much? No, I think data centers are in a very unique place right now. And we should pay close attention to the overall direction of these stocks because data centers are powering this AI boom that we are in right now. And I would expect data center stocks to do well, which is why we're going to go over them here. Let's see. How's everybody doing? Johnny's here. Johnny, happy Saturday. What's going on, Johnny? What's going on, Jose? Rich Tech Robotics, if you get a chance. Jose, did you get my follow-up message after our call on Friday? Make sure you check that message I sent you. Jim says, hello, Will. Any feedback on CTM insider sell? I think that insider sell was only about $40,000 or something like that. So I wouldn't be too worried. I mean, that's kind of just like peas and some corn, right? I mean, that's nothing compared to what you would expect from insider sells. If I'm not mistaken, it was just around $50,000. All right, Jer James is here. What's going on, Steven? All right, so the number one data center company that I'm following right now is going to be APLD. We've seen some significant gains on the stock because in this AI boom of more investors from Apple and NVIDIA and CoreWeave, they're doubling down on the construction of data centers. So this company here, Applied Digital, is building they are constructing the data centers, and they're doing it in a way that is more efficient than traditional data centers. So traditional data centers oftentimes have air-cooled, or they're relying on the grid, or they are not built in a strategic location, and they usually have a higher carbon footprint. When it comes to APLD data centers, they're focusing on liquid cooling. Okay, they're building them in very specific places that are the right places that you'd want to see them be built for maximizing efficiency. Okay, and the other thing we got going. Sam, you got your phone there? Sorry guys, the phone was ringing. My wife is here and she's taking a nap and she has our loco cat on her, so she can't even like move and her phone is ringing. That's hilarious. Okay, let it go to voicemail. Super Microcomputer is one of their sponsors, and you see them build strategically in like North Dakota and building in cold places these data centers to maximize the efficiency. They're partnered with NVIDIA, Dell, Intel, so the top AI companies in the world are looking to build more data centers, right? So when it comes to the solutions from APLD, they're specializing in the construction, okay, and they are also focused on going to the point of generation like wind and air or wind energy and all that stuff. They've signed some deals in the billions of dollars. Here's a recent deal that was a $7 billion total revenue from lease, which actually was increased recently to 11 billion, but their market cap is still at 5.37 billion, which is pretty small compared to the types of deals that they're seeing above 10 billion. So with that being said, they're up about 120% year over year. They haven't seen the reflection in their revenue. So they haven't seen that hit the revenue. And the balance sheet is up about to $2 billion in assets at this moment. So what's next for APLD? Well, we do see them reach a high. We've been following them for a while. They've had a consistent uptrend of higher highs up to this $20 price point, and they're at an all-time high right now. So they are at an all-time high, or I think they might have reached this level maybe back in 2021. But nearest support level is going to be right here at $19.75. You can kind of see that level. So for APLD, $19.75 is the support level. Resistance where they're going to face some friction here is going to be right here around $20.75. So if they continue to run, excellent. We do have some long-term positions in APLD, but if they continue to sell off or have a correction from this massive run we've seen them have recently, I wouldn't expect a massive correction in data centers right now. I would expect more of a smaller correction, probably from $20.50 down to about $19.75, which is only about a 3.5% sell down. Why are we still holding to bullish on the data centers? It's just a matter of market demand right now for the value of AI from big tech. They're looking to expand their data centers, and most data center companies and stocks most likely will see some continued growth. And I joke about it because when we're looking at the stocks inside of Mercatus, I was just getting a message from, who was I talking to? I think it was Alexander. I was talking with Manuel the other day, and he was saying, I'm seeing the stock projections. They're always green. What's going on over there? And I'm like, I think data centers are just super bullish right now. And so a lot of the stocks we look at are bullish. And so that's why it's like everything's looking like 3, 5, 10% over the next 6 months to next year, potentially like 10 to 20% gains. It's the demand for AI, and that's why we're seeing these bullish projections from almost every AI model. I think Grok has been a little more on the bullish side. OpenAI and Grok has been better on the shorter term analysis for projections than Claude and Gemini. I don't know what that is. Maybe Grok uses the X platform, like Twitter for the projections. But anyway, pretty bullish on most projections for data center companies. All right, so let's get into number 2. So we kind of went over the financials. They're building a lot of data centers. We kind of went over the growth we're seeing with APLD and how they're continuing this trend. The second stock we're looking at here is AMD. Now, AMD, we had a monster trade on AMD earlier this week. We were able to trade AMDL, which is the 2X. We bought the dip right here at market open on 18th of September. Everything sold down, and we made about a 10% trade over on AMDL, which is a 5% recovery on AMD. So AMD's at about $157 a share. Okay, and they've had this overall uptrend climb, and they're now into some highs, but they're still targeting, while they're at this support level that they just bounced here at 150, they're still targeting to get back up into this 175 range. And that's kind of what we're watching. It's kind of like continuing this trend, getting up into this 175 range. And we'll talk about why AMD is going there. It's partly in the Starlink, the space exploration. There's also a company they recently acquired, which we'll get into. And those are things to watch with AMD. But let's see what else we got here in the chat. So You have Steven APLD. Can you look into GPU-S? Irene says. Take a look there. For sure. And then let's see what we got. Steven's here. APLD has already broke down in Harwood, North Dakota. Awesome. Broke grounds. They're already building. Awesome. Good to see. Thanks for that update, Steven. I've seen some updates from people that live in North Dakota as well. That's one of the beautiful things. Like, I remember we were covering some stocks like Big Bear, and I was like, they're in this airport and this airport. And then someone else says, oh, well, I saw them over in this airport. And I'm like, they haven't reported that yet. And they're like, yeah, well, here. And they sent me a photo. And I'm like, all right, so they're there. Part of the beautiful thing about social media is that we get to find information before it's released. Happens all the time on the channel. So that's good to know. They broke ground. Okay, APLD, that one's doing well. We got some people interested in there. Selling APLD at $5 post drawdown. I don't know if there's more upside. Is over $20 still a buy or wait until earnings? Depends on your plan, Jer James. If you're here for the long term, yeah, any time you buy is a good time to buy. If you're here for the short term, you're looking to just capitalize on the volatility. Sure, they're at some highs right now. The nearest support is at $19.50. So maybe you kind of like manage risk and have some risk management around that point. But you look for them to continue up and give yourself a little bit of margin for error and look for that gain. It really depends on your short-term or your long-term approach for the trade or investment, right? Jzev says, hello, Will from NYC. Glad to catch you live, APLD. Hey, Jzev, good to see you here. We have so many people from NYC that I think Wall Street watches us. It's like unproportional. Like I could go open up my YouTube right now. If we go to analytics, Jzev, it's so funny. You go over to our audience, right? And by the way, guys, over 250,000 this month is crazy. Thank you. Let's see, New York, 6.5K viewers specifically from New York. And then Los Angeles, London, Singapore. But it's so funny. I think there's something to do with Wall Street probably. So anyway, thanks for sharing that. Cardman says, I love Mercatus, but the trust in it right now still has to build because every stock I have done shows the green. No red on the short term. Even stocks like AMGH. Yeah, I mean, that's part of this is not a pre-recorded stream. Hardman, this is not a pre-recorded stream. We sent out the replay though oh, you're probably thinking of the replay for the machine. And when it comes to the green projections, like I was just talking about earlier, like everything was green this projections for this week, but let me tell you, like almost every stock was green this week. So like, it hasn't always been green for every stock. I'll tell you that. It just seems like this week it's been extra. This past week was really green. And then if you need more info on Mercatus, you can always shoot it over. Data centers, uranium stock is what you need to be in now. APLD, yep, AMD. So Joseph wants APLD. Jay Fremix says, hey everyone, hope everyone's day is well. Thanks for tuning in, Jay Fremix. So this is what we're going to jump into. Steven says, you'd be foolish to sell APLD now. This is a hyperscaler announcement coming up soon. I wouldn't say you'd be foolish to sell. It depends on your plan. APLD, what we were just looking at, they're at these highs right here, okay? While their deals that they have are in the billions of dollars, it would make sense that they continue to run up into that $30 to $40 range. Like that's actually what would make sense based on the deals that they have. But if you look at their current revenue, it hasn't reflected those deals that they've signed. Will it show up in the next earnings? Most likely. When we see people say, hey, they're breaking ground over here, that's great. But you wouldn't be a fool to sell because it depends on where you're coming from. If you got in at $3 a share, or when we started covering it around $2 a share, And we got in a little later than that, around like $6 a share. But if you got in around $2, $3 a share, and you're looking to size down a position to roll it into something that you think could potentially have more upside, then it wouldn't be foolish to sell at all. I mean, you basically tripled your money. So, it just depends kind of on the approach, right? It depends on the approach that you have. If you're in the markets at all holding assets, you're not a fool. Because with inflation and everything else, the best thing you can do to protect your fortress is to hold assets. So it's okay to sell. I always tell people, if there's a place where you're going to get a greater return, then it's okay to sell. I've made plenty of bad trades in my lifetime, and the best trades I made have been trades where I feel like they're way undervalued. Okay, so if you're feeling like in your position, things are not, they're feeling overvalued, you've already made triple your money, it's okay to sell. It's okay. All right, so let's jump into number 2. So again, AMD stock, we'll just run through it really quick. You guys probably have heard a ton about AMD because they're a competitor with NVIDIA. In fact, I'm pretty sure that the CEO is the cousin of NVIDIA's CEO for AMD. But here's what you need to know. If you search up AMD and Starlink, you're going to see some videos that we've put out in the past, which is really cool. Now, AMD stock is my number one holding personally, and I started entering it back around 140 a share and then really doubled down around like $75, $80 a share. Now, that doesn't mean it's, buy or sell. I'm just telling you, so you know. But why I like them is because I see that Starlink is seeing massive demand and the company's growing fast. And we're running this stream right now from Starlink satellites. So like, I'm a believer in, like, if you see the tech right in front of you and you're holding it, it's changing how you do things, then it changes the way that you do things or makes it easier right in front of you. That's a company that I love to buy usually. And so Starlink relies on AMD to provide the chips. They do their Versal custom chips for use in SpaceX Starlink satellites. The chip capabilities from AMD offer features critical for Starlink's network, including AI performance, low latency, wireless acceleration, real-time control, and it's a strategic partnership. And the use of this is not just small, it's actually a massive aerospace and telecommunication company, SpaceX, adopting AMD chips, which I think gives them an advantage over, for example, NVIDIA, because not only is AMD seeing doubling of their revenue and really increasing their revenue year over year and quarter over quarter, they're also building data centers. They've pivoted heavily to data centers, which is a very strong demand from almost every tech company. And as a result, skyrocket. They're making about $8 billion a quarter, and their total assets are up to about $75 billion, with their total liabilities down to $15 billion. So they have a pretty disciplined balance sheet. What that leads us to see is that they're simply possibly trading at a premium when you look at their PE ratio, but they're positioning themselves to be a key player in AI and potentially being one of the top 7 companies in the world, I believe. Based on that, is it speculative? Kind of. Is it looking at what all the top 7 companies are doing right now and saying, well, that's what AMD is doing, but they're doing it really well, so they'll probably make their way up there? That's basically the philosophy. And their market cap currently is around 255 billion. If they get up there, they're probably around $1 trillion. That puts their share price around $400 to $500 a share. They also recently acquired some AI software companies like Brium. Brium specializes in the large language model era, where they have demonstrated that they were able to run their software to speed up the outputs of AI running on AMD chips. And so you can see on the left, this is Brium Inference. And then on the right, this is SG Lang, which notoriously will run like ChatGPT or what have you. So they basically found a model that can spit out answers faster than ChatGPT. And it was quietly announced that AMD bought the company. And I think back in June that was, yeah, that I think that acquisition on AI inference and machine learning, AMD says this acquisition strengthens our foundation for long-term innovation. It reflects our strategic commitment to AI, particularly to developers who are building the future of intelligent applications. It is also the latest in a series of targeted investments following the acquisitions of Silo AI, Node AI, and Mipsology that together advance our ability to support and run open source software. So essentially, they're going to position themselves to be able to run companies similar to how OpenAI or Claude or some of these companies we were talking about here on Mercatus that we use for plugging in all of the financials and the data that makes these models be able to go in and do the research for us. They could be very quickly one of the companies that is a Grok or a OpenAI or ChatGPT. And so that expands them in a unique place because not only would they have their own AI models, but they would also have the infrastructure built, that they owned the infrastructure of not just the semiconductors, but the data centers in their entirety. So I think that would be a really big advantage for AMD. And so that combined with the space exploration makes them one of my favorite companies. And according to Mercatus, this stock is estimated to be worth about 18% more in the next year. Wait, that's not the right stock. Let me jump in and do AMD, excuse me. So as you can see, you got AMD and we're doing Gemini. I'd like to do OpenAI actually. Let's do OpenAI. Get an analysis here. So you can see it's pulling the relative financials. It's skimming the press releases and the verifiable sources, analyzing the charts to all the relative timeframes that we'll want projections on. And then it's going to go ahead and just give us a projection here. All right, so over the next year, AMD is actually meant to get up into about $195 to $200 a share. So over the next year, they're projecting it to raise as much as 35%. So it's not very often that you see 35% potential in a stock. And I think that that's a beautiful long-term play, and that's why we continue to buy it. So right now, they're at a support level at about $48 a share. That's where they bounced. That's where we traded them earlier this week for a nice like $500 to $1,000 trade, somewhere in there. Got to look at our trading. It was AMDL. And we bought this dip here, but we're looking for the next price target on AMD to reach up into the near term, about 175. That would be a 12% increase from here. So we're going to be watching that 175 range for AMD stock. All right. So we got some good ones here. We got Kevin says, live on a Saturday. What's going on? Awesome. Good to see you, Kevin. Thanks for tuning in, man. Justin, regardless of why, when, or what reason you're on YouTube, you will blow up, Will. We love you, dude, and appreciate everything you do, especially these live streams. Ah, dude, appreciate you. Let's go, man. Justin, you're awesome. Appreciate you, man. I'm just here to, get you guys the insights that you need and that I wish existed out there. And I'm like, let's make it happen. And you guys bring me the best insights. Like so much of what we have on this list, is a result of some of the investors here. So, keep it up. And also in Stockmate. Stockmate is the other place where we see like Stockmate, we have some great investors here that leave some really good insights. And there's some really good insights from investors that we have over about 25 millionaires there. So if you guys ever want to tune on into our live trading, it's the second link in the description below if you'd like to join us there. So the next stock we have is TSSI. This is our ranked number 3. Looks like last time we were analyzing it, we're looking for a potential push up from about $14 a share. We did see them correct down momentarily, but still holding this support level and continuing to potentially build their market cap as they have here. So TSSI is at $15.92. They're a company that specializes in data centers. Specifically, if we can open them up here, they're out of Texas, I believe. Here they are. Capacity, complexity, simplified. So they do AI focuses on data centers and rack integration. So they build these kind of super microcomputer-esque racks. So some people think super microcomputer does GPUs, but they don't. They actually just build the racks that hold all of the GPUs for NVIDIA or AMD or what have you. And so this company has liquid cooling racks that they distribute into data centers. And they also help people hook up data centers, which is a big demand. It's kind of like, imagine you had like construction booms happening in a certain place, and you knew the construction companies that were going to be building it. Like those construction companies are probably going to make some more money. It's kind of like that. Like if we see data center demand increase, this is a company that specializes in building them on kind of the details on the inside that can be pretty lucrative as a business and valuable to the marketplace as big tech is willing to pay for it. And their stock has seen some interesting moves recently. Their market cap is still pretty small at just 432 million. So they do fluctuate pretty heavily or pretty volatile in their movements. You could see they've had, $15 or $16 down to, $12. That's just in a matter of a month. But over the last 6 months, they've gone up about 75%. Some of the news, there's not a lot of hype around the stock, which is what I like. When we look at their quarterly income statements, they've seen revenue increase year over year here. Let's take a look. Year over year, they've seen their revenue really ramp up, especially in the last 3 years. Their revenue surged to 150 million in 2024, and then in 2025, they're on track to do twice that, as they've already cracked basically $144 million. So they're already surpassing last year's revenue just 2 quarters in to this year. So this next report, we'll see how it comes in, but they're already crushing it. Revenue, so if they're bringing in on track to bring in 300 million this year, revenue's up 261%. So they're really growing. And what I like about them is that they're growing. What I don't like about them is that their liabilities have been growing just as much. So the liabilities are up there. Their total assets might be up 382%. It's great, but their total liabilities are up as well in the triple digits. So that means that their actual equity is only about 10 million. So assets are up to 140, but total liabilities are at 129. So it's like they don't have a lot of wiggle room right now if they end up spending more, unless in what we haven't really looked at is, did they raise some money recently? So let's take a look and see if they were able to, if we can find anything in their recent press releases that would give us some insight into how they've been working over the last 2 or 3 months, because this last 2 or 3 months would be critical. Well, this is actually, not always do you look for revenue, or not revenue, but raising of money. Sometimes be like, oh, raising money, like diluting investors, not good. But there are times when it's good, like when they're scaling. And in this case, they actually did end up raising some money, as we would like to see. They raised about $51 million in August, and then they closed at 58 million in a day later. Okay, so they're actually they most likely increased their balance sheet significantly. So what I was just saying you, which was like the chink in their financial armor there, which was that their liabilities are high, most likely that'll allow them, that money they raised, to either increase the gap between their total assets and their liabilities by adding to their assets, or they might pay down their liabilities, pay down some of that debt. But either way, they should have a more disciplined and healthier balance sheet into the next quarter based on what we see the company release news wise. So with that being said, $432 million market cap, they're in this consistent uptrend that they've had over the last few months. And they're starting to gain some momentum, pushing back above that 200-day moving average. So this green line is going to act as a support, this 200-day moving average. In a bullish environment, we see them bounce the 200-day moving average and starting to push above that EMA, which if they're above the EMA, they're looking more bullish. See that blue line? If they're below, they're going to be more bearish. And we do see them start to bounce that 200-day moving average. They're starting to continue the uptrend. And we could see them not just push up here, but start to knock on the door of a previous resistance at $16. They're at $15.92. So if we see them break above the $16 range, I'm really looking for this move actually, which is about a 30% increase on the stock up into about $21 a share. So I'd like to see that in the next few weeks to a few months. And we're most likely going to be looking to enter some more positions on TSSI into this next week. But we do have to watch this level carefully because it is small market cap. If we start to see a downturn or a pullback down to that $14 range, if we're in a short-term trade, it's crucial to get the right entry here and that we have a plan together. So we'll see how the market opportunity presents itself on Monday at market open, and we'll go from there. So that's going to be TSSI. That's number 3 in the top data center companies powering the AI boom that we're watching right now. So again, we'll be watching at market open. If you guys ever want to tune on in, it'll be in Stockmates in the second link below. Now, WULF is number 4. Number 4 is WULF stock, and we were looking for a 22% bounce when we did our last analysis around $9 a share. So they're now at $11 a share, and they did make that 20% bounce off that previous resistance and continued up into what is now 11 bucks. So $11.05 a share now, and they're starting to increase their market cap significantly over the last few months. So you see this big surge, and it looks like it's overbought because it's looking way over on the RSI, way over on the MACD. You see it almost all-time highs, I think they're at now, except for IPO. They're back to 1163 and down to 11 bucks. So when we're looking at the moves for WULF, they are building data centers specifically for blockchain infrastructure, and they've received some significant investments from Google. Okay. So it's called TeraWulf is the company, and if we go to their website, you can kind of see what we got here. So you can see the data centers that they're building, and these are more focused on the liquid cooling and particularly building in places for hydroelectric power and solar power, and they're looking to go bring those sources of energy directly to the data centers, and they also are in the Bitcoin mining as well. So the reason that we like them is because they have this focus with Google and with some other companies on building Bitcoin mining. Google doesn't openly invest in a lot of these companies because, well, it's usually like if you have a company that's Bitcoin mining, it's the biggest question is integrity, because you can invest in a company like this, but what if they're just selling stocks to go fund more operations and diluting investors? Or what if the profits that they're making are just fueling the company, and if they don't have dividends that they offer, how does that help investors? And that's kind of like what we saw with MicroStrategy. Like MicroStrategy everybody's talking about it, like they're buying so much Bitcoin, it's genius. But it's like, okay, but do you know that they're selling their own stock to buy Bitcoin? Because if you know that, then you probably wouldn't buy their stock, because by doing that, their stock gets depleted. Now, I haven't seen that in WULF stock. In fact, they've continued to grow, and they've continued to kind of build this trend. But now that they're all-time high, the reason we have them down at number 4 is because of that risk and not having the clarity around it. Now, when we look at some of their recent press releases, let's kind of jump into what they've come out with. Let's see. There's a lot of hype articles, so you got to watch out, right? A lot of hype articles that we see. And you got to make sure that you don't listen to those, because they're not very serving of your best interests always. But when we look at the news that's come out with the company and just kind of get a general overview of what's going on, you have a really big focus right now on the Google partnership. Okay, so the Google partnership here is an expansion new equity investment, as Google supplied an impressive 360 megawatts of IT capacity, and Google announced plans to invest $3.2 billion in exchange for a significant equity stake in TeraWulf. For shareholders, these updates highlight both growth prospects and questions about dilution risk. So that was my question, right? Dilution risk is a big deal. That is something that could happen, especially in these companies. And Google, rather than saying, they were probably looking at where to allocate their money, and they were saying, we can allocate our money, but we don't want to own the stock of this company. We want to actually own the operations of this company. Because if you think about it, like MicroStrategy, you can own the stock, but you're not entitled to any of the Bitcoin that they buy. You're not entitled to any of the assets they have. And so they said, we want to own the actual operations. So Google wanted significant equity stake. That's why they get into it. And Google is basically saying, hey, we didn't build this stuff to mine Bitcoin and all this, or maybe even have as much data centers as we'd like. So maybe we should just straight up buy some of these companies that have been building data centers so we can have our own. So that's kind of the play with Google. And you see the stock start to surge recently up to 1163. Nearest support level is going to be the previous resistance here at, and we got that 20% swing we were looking for. Now it's up to that resistance. So we do have a resistance level here, but nearest support level is going to be this previous resistance here at about $10.80. That's that level there that they kind of pulled back down to here. And they have a support level at $10.85 here. So that's where they're at now. And that's actually just happens to be where that green line, that moving average is, that could potentially act as a support here. So if that's the case and we're looking for that bounce, the margin for profit is still pretty small and risk might be higher. We're looking at 5, 7, 8% if you're going for a short-term trade. Long term, I think this is one of the companies that might have potentially more integrity than most Bitcoin mining companies, which is why we like it. I mean, what do you guys think? If you see Google actually owning a stake in it versus, it's just a Bitcoin mining company that could sell shares, probably less of a risk than a company that's going to dilute investors. So right now, it looks like they're kind of seeing that integrity play in their favor. They got about a 6 to 7% upside on the near term, but at all-time highs, the nearest support there is at a 1085. If they don't hold there, next support maybe at $10, next support maybe at 925. But that's kind of the key with WULF stock there. So long term, I'd say it looks fairly good. Short term, just trying to hold that that's really that 1085 support. Pui is here. Pui says, how about Wolf or Irene? Oh, well, we just went over that. Hopefully that's helpful for you. I also saw Pui was looking to get access into our live sessions. I got your email. Just want to let you know how you kind of join in. Go have a message in here for the members. One thing you'll note, we have the newest members that came out here. You're surrounded by 27 recorded millionaires who are in StockMe. So make sure to comment, give some insights, because some of the insights here are tremendous. And then look out. We're going to have some earnings come out for this next week, tomorrow night, with all the targets of the stocks along with when they're reporting earnings. So have a look there. But ultimately, check your email at Market Open or go to the events section, because the live session for tomorrow morning is happening at 6:30 a.m. So if you want to be there, Pui, I just want to make sure you got that. I know I sent you an email, but I wasn't sure if you were asking me how to find it after you got into StockMe. Cool. Carmen, this is Shaw's. I don't know if you remember me, but on my main account, when I type in your live stream, my message doesn't always pop up. Ah, okay. Interesting. I'm not sure. Are you signed in? You're sure you're signed in? We'll have to take a look. Steven says, hey, does anyone think it's odd Rigetti jumped so much considering the Air Force contract was kind of small? Steven, first of all, if you were in it, congratulations. We were in it. We're celebrating basically on Friday. It was a great time as they're surging to all-time highs. And I would say it's just them pricing in for the future. That's all it is. That contract was relatively small. It's not something that would move $1 billion in market cap. It was just that the quantum computing market potential is so great that investors invested in the potential to bring the price up to where it most likely will be or would be about 3 to 5 years from now. Basically, that's what happened. And so we saw the value gap fill so quickly. And now that it's there, I mean, we could see some corrections. We could see, we'll see how investor sentiment holds. And if we do get confirmation of a reversal, potentially we could trade, inverse at market open or something like that. But do you think it's weird? I don't. I think it's just a matter of value filling. Yeah. Does that make sense? Cool. So the final stock we got here on the list is going to be ANET. This is Arista Networks, and Arista Networks is similar in their focused cloud approach as they build for data centers, and their financials are also much greater than most of the companies, which is why I included them at number 5, because they're probably a slower mover. So let's pull them up and let's see what it looks like. So first thing you should know about ANET, they've been on this very consistent uptrend, and we're looking for this move to continue up into this 160 range. So about a 7% increase. But as you can tell, they've been extremely consistent in their pattern, very consistent in their uptrend. Higher highs, holding for the most part over that moving average, especially if you pull it to the 4-hour, you'll see that it's just very consistent in their uptrend. Now, when you look at ANET's approach, they are really focused on the networks that are going to accelerate all of technology. So they work with, you can see Sam Altman, Lisa from AMD. They are having multi-vendor MPLS and SDN in their operability. They're doing cloud networking. And if you look at their newsroom, or you can look at some of their current technology partners here, you can see they have a ton. So they got AWS, so Amazon. They have, Harmonic. I think that is that company, Vlad Tenev's company, I think. They have NVIDIA. They got Microsoft. They have Telestream. I mean, we're looking at almost every Broadcom, like top Mag 7 is here basically. And so Google Cloud is there as well. The financials have seen increases in revenue. You could see just this stair step of revenue increasing. Their 2020, 2021, just getting up into $7 billion in revenue in 2024. And then in 2025, they're on track right now to come in with over $8 billion in revenue. So again, increasing revenue this year, up 30% year over year. Their balance sheet has seen increases in total assets as well, up to 16%, 16 billion in the last quarter. So with their current market cap, they're out of Santa Clara, right next to Nvidia and AMD, and market cap's at 188 billion. Their PE ratio is at 58, which actually means that they're more favorable to continue up than, for example, AMD from a valuation standpoint, although AMD is in the Starlink part of the tech world, which I think is a massive advantage. And there's things to consider on why AMD would be better. Personally, I'd probably lean towards those. But people that are looking at ANET right now and just from a valuation standpoint and where it could continue to grow to, yeah, we're looking at the next target probably in that 160 range with a potential pullback down into this 143. And overall long term looks great for ANET as they continue to build. Short term, they're kind of a good deal. They were a better deal when we started covering them after this big pullback down to this 139. And we were looking for this swing. It would have been a 20% swing. Now that same 15, 20% swing is now just about an 8% swing because they've made a portion of that trend is playing out already. So a little more risk probably than you'd like to see in the shorter term, but longer term looks pretty good. And that's the breakdown for ANET. Awesome, guys. Well, I appreciate you all for tuning in. Those are the top 5 data center companies to be watching here towards the end of September. So Steven, Dylan, thanks for tuning in. Thanks, Jim. Jim says, hey, Will, join Stockmate today. Let's go. Let's go, Jim. Thanks for joining. And congratulations. I'll give you a call after this. Does it matter? Says, I'm waiting on Quantinium AI data center IPO in the future. Yeah, I got to talk with the Quantinium gentleman at CES who is running their quantum sector in drug discovery. And they're working with, I think it was Amgen, which is a multi-billion-dollar company on using quantum to bind peptide proteins. That's the main company that's doing that, which could allow them to essentially take millions of possibilities and find the cure to different diseases extremely fast, maybe even cancer, which is really, really impactful tech. So if they ever IPO, we'll definitely be covering it over on Quantinium. Thanks for tuning in. Appreciate it. Denny, thanks for tuning in. Jared James. And just a friendly reminder, if you guys didn't see the reveal of the machine, we did a full reveal here. And I could search any stock I want now. It's gonna give me the analysis where we reveal this AI stock analyzer, and also you can visualize different markets and see them in 3D and see how emerging markets are developing. And we released it on Thursday in a launch. So if you missed it, go ahead, go to the link I'm dropping in the chat. If you want to see the reveal and see what this thing is all about and how you can save time on your analysis, you can always go there if you want, which is going to be, it's going to be called, let me get the right link for you. Two Brother says, can one join Stockmates today in time for Monday's live trade? Yes, you get a link in your email every morning at Market Open. And yes, you will be able, you could join 5 minutes before the session. Well, that would be probably too close. You might get the email reminder, but yeah, you'll get an email reminder with the link to our private live trading session in the morning on Monday if you get into StockMate, of course. Lifetime access to that, and you'll get a free t-shirt. But I was trying to send over the link for if you missed it. Let me see if I can open it up. Here it is. Okay, Stock Analyzer. So you can go to this link I just dropped in the chat if you missed the Mercatus reveal of what I have on the screen right now. Just go to cash2assets.com/stock analyzer and you can watch the replay. And it will give you the full replay of the machine that we're using right now to use Grok or OpenAI, and we feed it all the financials. It does the press release skimming for you. It pulls those news articles, and you can actually have it do the analysis from any of the top models in the world with proprietary extra market data that we feed to the models. You get access to at what is a fraction of the cost of what these models would otherwise cost you. So again, you can check that link that I just sent in the chat, go see what it's all about, and start getting analysis done for you on autopilot. So right now we're doing the Grok. If we switch OpenAI, sometimes Grok can take a second. It will do the analysis for us here. And I appreciate you all for tuning in. Thanks so much for the awesome live stream, guys. And I hope you have a great rest of your Saturday. And I hope you guys get some good hydration for the upcoming week. Who's excited for Monday? I'm pumped for it as well. Maybe I need to refresh the page. But here we are. Let's try it again. AMD. Let's get it to pull up. And if you guys if you have like family, give them a call, say hi to them, because once that market opens, man, get your rest this weekend. Once the market opens, it's going to be war. I'm just kidding. It's not going to be war, but it's going to be really fun this week. So I think something's going on with my cash here that I got to cash in. So the analysis is giving me a second here to load up. It's taking a second here. But for saving on time, I'm going to let you guys go. Have a great rest of your day.